Yeah. Two. Yeah. Aye.
Got over money.
I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is hating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it. Yeah, in the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking eyes flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game. Yeah, ayy. All I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the work hard, play hard, homeboy, everybody ain't calling out. Got a mouthpiece from the southeast, if you want scrap, stall him out. If you don't know what I'm talking about, then I feel good, man, I'm balling out. I'm a rich man with a rich fam, Christ bars got me out of mama house. And I bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace. Big God, big grace. Big God, big grace. Big God, big grace. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.
What it do, baby? It's your partner in this thing, old looking old. So first, when you see that thing, guys, take that down picture for your mom and them. And guys, welcome to another edition of the Countermove podcast, guys, to where we kind of lean in and reason together, prescribe some right solutions, and really look at this thing from a wise perspective, guys. This one is going to be a really good one. So if you could, guys, no matter what platform you're on, share. And at the exact same time, guys, subscribe. You haven't subscribed at all, man. But man, this one here is going to be a very good one. So bring your pens and pads, guys, on this one, because this one's probably going to shock a lot of people what I'm going to talk about. Um, Guys, I was actually perusing online a little bit, and I was watching probably one of the most um, popular podcasters in the world. And he was talking about a topic, and this topic kind of shocked me. So I went and looked at it to see, okay, let me make sure this is for real. He's normally tight. His sources are impeccable, but he mentioned something about a wealth tax that may be coming. And I said, wealth tax. Now, I heard a little bit about this, guys, earlier on. It was in early 2022. I heard a little bit about this when the government began to talk about taxing dollars, a certain amount of dollars over a certain number when it came to Zelle or cash or things of that nature. But it was more of a Fed Now push. If you don't know what Fed Now is, guys, look at a previous kind of podcast. I'll go into deep detail of what the Fed Now system is. But well, to be honest, I said, okay, it's coming. But then I heard of a term of unrealized gains. And I said, wait a minute. And really, there's one person that began to really talk about this, and that was Elizabeth Warren, Senator Elizabeth Warren. She had been a big proponent of taxing, they called it a wealth tax, guys. And the focal point was really on taxing unrealized gains. Now I'm gonna dive into what that is, but let's kind of unpack this real quickly so you can see what's going on. And before I begin playing in videos, let's go to an actual documentation about it to say that like this is for real, guys. This is real. So let's look at this real fast, guys. All right, here we go. Boom. This is the case. This is on Vox. All right, it's Vox. So this is not a right-leaning place. This is Vox. Vox is and Red Pill. You are correct. Red Pill's talking about unrealized fluctuates so much. There it is. She said, depending on the market, my equity goes up. Exactly. So we're gonna walk through this step by step. Okay. This is on Vox. It says billionaires have a surprisingly bad day in the Supreme Court today. What do you mean? It says, even this very conservative court appears reluctant to blow up the federal government power to tax the rich. Now, they're talking about, I believe it's the 16th Amendment, I believe. One of the amendments is talking about the word income. We're going to read it, and then I'm going to bring on two commentators that's going to unpack this to the T, all right? So get your pens and paper. This is real, guys, all right? It says, here we go. The Supreme Court, right here, the Supreme Court spent much of Tuesday morning beating up Andrew Grossman, a lawyer asking the justice to revive a long defunct limit on Congress' ability to levy taxes. So this is over taxes. Here is the case. The case Grossman was arguing was Moore versus the United States. It's widely viewed as a preemptive strike on wealth taxes. That is, taxes that target the stockpiled wealth of very rich people that don't simply tax the income rich people earn off their wealth. I'm going to debunk this in a second. All right, guys. I'm just reading this, but I want you to focus on this here. It says focus. It says stockpiled wealth of very rich people that don't simply tax the income rich people earn off their wealth. Okay, guys. The key word there is income. I want you to focus on this word income. All right. So that's what it is. Now, who brought this up? No problem. It was Elizabeth Warren. During the 2020 presidential campaign, Senator Elizabeth Warren proposed a 2% wealth tax on Americans worth over $50 million. But neither Warren's proposed tax nor anything similar has ever become law, and there's no chance that it will become law so long as Republicans can control at least one house of Congress. Do you see how they actually are kind of putting this up there this way? You see how they're doing? Is they're presenting this for Fox a Republican versus Democrat thing. Don't put that to the side. Focus just on the words income, right? And taxes. Income and taxes. And the wordplay here is the wealthy, right? So really three words: income, taxes, and the wealthy, right? This is the case right here, all right? Moore versus the United States, right? We're right here. Now, it says in any event, most of the justices appear extraordinarily skeptical of Grossman's arguments of the idea that the court should revive a long discredited limit on the federal government's taxing power, which the court briefly embraces during its Lockley area, an age where the justice regularly signed onto dubious legal arguments that protected capital from taxes and from workplace regulation. I ain't gonna read this whole thing, but what they're talking about is how they're presenting this, guys, from Vox, is they're presenting this from an income standpoint. As far as, income, basically when you actually, I'm gonna use an investment because I'm in real estate development and finance. So I buy a property for $20,000. I increased it, it's worth $100,000. I invest $20,000 into it, so I'm all in $40,000. Right? And then I sell it for $100,000. There's a $60,000 net there. They're talking about, they're presenting this from an income or capital gain scenario. But that is not the case in this here, right? They're really talking about unrealized gains. Unrealized. What do we mean by unrealized gains, guys? All right, let's read down here real quickly. All right, to this thing here, it says, what is a specific issue before the court in Moore? No problem. The fully array of legal issues is dizzily complex. To completely understand the case, someone must have a working knowledge of how tax accounting typically works, how it works for certain investors who are taxed differently than others. Okay, understand that. How the court once read a provision of the Constitution enacted to preserve a union between free states and slaveholders to protect investors from taxes, while the United States amended its Constitution to restore the federal government's ability to tax investment. Here we go. Income. Investment income. Let's keep going, guys. All right. It says, but the shortest explanation of what's at issue is in more is that it asks whether the Constitution prohibits Congress from taxing investment income before that income is realized. Right? Let me read it again for the folk in the back row. Before that income is realized, meaning that the investors has sold an asset for a profit or otherwise the pose of that asset. It's before that. All right. So let me read it again so folk can hear it again. But the short explanation of what's at issue in more is that it asks whether the Constitution prohibits Congress from taxing investment income before that income is realized. In my example, I bought it for $20,000, guys. $20,000. I invested 20 grand into it, so I'm only at $40,000. This property. I then sell it for $100,000, right? I made a $60,000 profit there. That $60,000 is normally taxes. That's the capital gains taxes. This is saying, right? This is saying, okay, I bought the property for $20,000. I put 20 into it. That's $40,000, right? And is worth $100,000 the after prayer value. What the Biden administration is arguing right now is they're saying we should tax it on that $60,000 that has not been profited yet. I haven't sold the property. It's just increased in value because I increased the value of the property. They're saying they're trying to change the definition of income to unrealized gains. You haven't received the $60,000 yet, right? But it's there. You haven't cashed it, but it's there. We want to tax that income, right? Why is that a big deal, right? Why is that a big deal? That's just they're talking about the stock market, because most investors' money is in the what? Stock market. What's tied to the stock market, guys? Your 401k, IRA, Roth IRAs, 403bs. When that goes up in value and you haven't received that income yet, they want to tax that equity there. So you're going to talk about your home, the stock market, your retirement accounts. Hello. This is what they're arguing. They're trying to, the Biden administration is trying to contest, right? The meaning of the word income, so that it is centralized around the word unrealized gains. You haven't realized the gains yet. That's why the word before is there. That's the contention. That's the source of a contention on this Moore case. All right. Now, let me bring some individuals that can bring it in a little bit more. All right. No, you're correct. The reason why this is preposterous is because, as Red Pill says, it shouldn't be taxed because the investor hasn't touched the equity yet. So they're trying to tax you on money you haven't. That's not income yet. It's just sitting there, right? That is the play here. That's the play. They will not stop at just your home. We're talking about this is really centralized around the stock market. Again, all your retirement accounts and funds are tied to the stock market. This is real. This is in front of the Supreme Court right now. If you don't believe me, I know. Don't you worry. LaDale, you tripping. I got you, baby. Don't you worry about it at all. We'll go over to the tax foundation. No problem with you, baby. Here you go. Here it is, guys. It is right before. This is before. Here we go. This is before the Supreme Court. Look at this. I ain't tripping. It's right here. It's right here. It's before the Supreme Court. How the Moore Supreme Court case could reshape taxation of unrealized income. It is in front of the Supreme Court right now as we speak. They are hearing this case right now. Now, let's bring in a couple guys that's going to do a great job at unpacking this to us. The first gentleman is who I actually heard this from. This is from Dan Bongino. He brought this up, and he did a phenomenal job at unpacking all of this. right? Let's see what Dan said. Here we go, Dan. Let's go.
A wealth tax is coming. And if you in this chat think, well, I'm lower income or middle class, it's not going to affect me, you are absolutely wrong.
Yes.
It will 100% affect you.
Preach.
Say you bought your home 10 years ago for $250K.
Uh-huh.
Pretty reasonable home in America, right? 10 years ago.
Yeah.
Not now, but 10 years ago.
Mm-hmm.
And say it appreciated and it's worth $350,000 now. You have $100,000 in equity.
Yeah.
No, I don't have anything, Dan. I didn't sell my house. Bullshit.
Yes, sir.
The Biden administration is saying you do.
Yes, sir.
But Dan, I didn't sell my house. Doesn't matter.
Mm-hmm.
They are coming for your money.
Yes, they are.
They are ready to declare unrealized gains, i.e., assets you have but hasn't sold as income.
Yes.
No, they're not. Pull up the article, dude.
Here we go, guys.
The wealth tax you may already owe. I've only told you about this Moore versus the United States case probably 10 times. If we lose this case in the Supreme Court and Biden wins, you are 100% going to see a push for a wealth tax that is going to F you over like you've never seen.
Yes, sir.
Here's what the Supreme Court is saying. They're saying that if income for the purposes of the 16th Amendment doesn't require realization, i.e. you don't sell your house and take the money, neither does income for the purposes of the current tax code. And if the government, but the Biden administration, which is arguing that income means any, listen, Biden's team is arguing, this is important. I know the economic stuff. Please. The government's arguing that income means any economic gain between two points in time without regard to whether the gain is realized. Then you should have been paying taxes on the appreciation of your home and investments since the income tax started in 1913.
Yes, sir.
You think this is a scare tactic?
No.
They're arguing this in the Supreme Court right now.
Mm-hmm.
They are arguing for a wealth tax. Elizabeth Warren is pushing for it right now.
So, guys, again, this is not, I didn't make this up. This is the Wall Street Journal. Okay, the Wall Street Journal. I didn't make this up. This is in front of Supreme Court right now as you speak. Let's keep going. He's not done.
Oh, I don't own a house, Dan. Really? You own baseball cards? Baseball cards?
Keep
That's
going.
not wealth. Really? Have they appreciated in value?
Yes, sir.
You know, it's hilarious that people think I've gotten a few emails from conservatives who think I'm overhyping this. The same people I warned the government spying on Donald Trump when he was a candidate for president in 2016 who told me I was crazy are the same people now telling me the government will never do that. They won't tax my art collection.
Art?
Oh, yeah, baby.
Art?
Oh,
yes,
they
sir.
will. Oh, you're damn right they will. How easy is it going to be to audit you and find out that you bought a Thurman Munson rookie card on eBay 2 years ago?
Wow.
When they're looking for money because they're in a massive debt crisis because interest on the debt is through the roof. You think that's not going to happen?
Guys, come back to me. Guys, notice how Dan is not just sticking to the stock market. He went to baseball cards, art, cars, retirement accounts. Hello, homes. Anything that can appreciate in value right now, they are arguing in front of the Supreme Court that appreciation should be income. Income. Any appreciation of any asset that has appreciation, they're trying to say is income. He ain't done, y'all. We not done. Exactly, Red Pill. Any and everything that can appreciate in value, whether it is tangible or not, they want to use that increase and reclassify that as income and tax you on it. This is not a game. This is in front of the Supreme Court as we speak. As we speak. Exactly. If your dog is valued in some form, anything, guys, anything. Now I don't know how dogs and everything. I don't know how that works. Let me kind of backtrack. I don't know how dog stuff works, but anything that can appreciate in value, guys, tangible or not tangible. Hello, that includes crypto. That includes crypto. Guys, anything. Yep. Playtime is over. He's not done. Y'all keep going, baby. He ain't done.
They're already doing it with Venmo stuff.
Venmo.
You think this isn't you? He just said it. You have to report eBay sales now. Wait till they institute a central bank digital currency. Folks, this is all coming if we lose this second term.
You'll get nothing like it.
You will. You're damn right. What's that? Smith Smalls, right? What's that?
Okay. Now, guys, that's one take. Dan killed it. Now let's bring in another guy who actually did a phenomenal job at unpacking this from a systematic standpoint. I love how Bill O'Reilly broke this down. He broke this down so good. All right. Dan was really, he did a good job. He did a good job at unpacking it. But here's another perspective on this as well from Bill O'Reilly. Same case. Notice it's the same information. Let's move forward. Here we go.
U.S. Supreme Court. Now, here's what I was talking about at the Talking Points memo when I said 2024 is one of the most vital years in American history.
Yes.
The progressive left wants a socialist nation.
Okay.
They want strong federal government in Washington to tell all of us what we can and cannot have.
Yes.
The way you get that is by passing a so-called wealth tax.
Here we go.
Where the government comes in to your life and evaluates everything that you have, takes a piece, even after you've paid your income tax and every other tax they slap on you.
So get this, guys. Get this. Hold on. Man, this is good. Get this. Bill is saying after you pay your income tax, your regular income tax, they still want to tax you on the unrealized gains too. Damn, golly. Let's keep it going, Bill, baby. Break it down for us, baby.
And not only do they take a piece of what you have,
wow,
they take a piece of what you've gained on paper.
Yeah. Ooh.
So if you bought Apple at a low price and now you hold it, you have a profit on paper from Apple stock.
Yeah. Ooh.
But you haven't gotten the money because you're holding the stock. You think it'll go higher.
Yes.
Government wants to come in and take a percentage of the paper profit.
Sure do.
Okay, wealth tax. If Apple then crashes and comes down and not worth as much as when the government took whatever they're going to take, you don't get a refund. You don't get anything back.
No.
If a wealth tax is passed, no one's going to invest in anything. That would just crash the economy, which is what the progressives want.
Yes.
They want the private marketplace, capitalism, to blow up so they can replace it with socialism.
Okay.
This is what it is.
Yes.
Now, I don't know. I can't make it any clearer than that. So there is a Supreme Court case on this. Charles and Kathleen Moore, retired couple from Redmond, Washington, were taxed on a gain they had, an investment they had that they didn't cash in. So they filed a federal lawsuit.
So they were taxed already using this method. So someone is trying to create a predicate. They're trying to create a precedence. All right. They're trying to create law, trying to create it through the legal system. Keep it going, guys. Man, here we go. Ooh.
So you can't do that. The Constitution says this, quote, Congress shall have the power to lay and collect taxes on incomes.
There we go. Hold on.
From whatever source derived without apportionment to the several states and without regard to any census or enumeration. The last part of that means that there's no wiggle room, that Congress and the federal government can tax your income.
That's it.
Money you receive, real money.
Real.
Income.
Not typing on paper.
That you might receive.
Yes.
That you have on paper.
Yes.
No. Now, this is in front of the Supreme Court. It will be decided next June. My prediction, and we'll get this on tape, is 6-3
Yes.
in favor of the Moors.
Yes.
That the government cannot tax unrealized gains. Supreme Court's going to stop it. But the Ninth Circuit Court of Appeals, a federal court in California in the West, said it's okay.
Told you.
That's why it's at the Supreme Court level.
That's how it got there, guys. You're seeing in real time through creating a predicate or a precursor, or they're trying to, through the legal system, create a law by going through these courts, right? Notice how they began on the liberal side, right? On the liberal side, typically is their mentality is like the Constitution is a living and breathing document, and you can basically create your own context. It can change based on interpretation, right? That instead of looking at it and said, okay, what did the writers of the Constitution actually mean? But when they put those words there, on the liberal side, it's like, no, it's what I think. It's my interpretation. It's a living and breathing document. That's actually incorrect because you didn't write it. A constitutionalist, someone that actually has that context, what they say is, wait a minute, we have to revisit what the writers actually meant when they actually said it, right? That's what a constitutionalist. That's the proper way of doing this. But you're seeing how I went to the Ninth Circuit in California. They said, this is cool, and so they could have killed it, right? They could have killed it. But then now it's at the Supreme Court. So as you can see, action began, right? When it came to the Moors, which they were trying to tax them on unrealized gains. The Moors then, in a response, took them to court, right? Something happened in the lower court. It got appealed to the Ninth Circuit. Ninth Circuit said, "Yep, this is cool, no problem," because it's heavily liberal leaning, right? Heavily leaning, and then this got appealed all the way to the Supreme Court. So now we're here. It's over the word income. The whole word of income. Let's keep going. He's not done.
So the Moors lost in the Ninth Circuit because that court out in the West, based in San Francisco, is the most liberal federal court in the history of this country.
Wow.
Do we all have it? If you have any other questions, very important that you understand the big picture here.
Yes.
What the progressives want to do. All right? Bill at BillO'Reilly.com.
All right, guys. That's Bill, guys. That's Bill O'Reilly. Good breakdown. Good breakdown. Like Bill on that topic. It was really good, guys. Man, this is really, really, really interesting. All right. I had a question from someone in the chat, right, on YouTube. The question was, are they going to tax this in high times? If the Supreme Court rules really changes the definition of income to mean unrealized gains, it will probably, if it's high, yeah. If it's low, no. But they'll probably do it on both sides. Don't you worry, your partner got you. Okay, don't you worry. Now here's my reaction to all of this. You're seeing an ideology battle, right? You have a liberal ideology and a originalist ideology at battle right now over the document of the Constitution, over one word, income, right? The liberal sides want to tax you on unrealized gains, right? The originalist side is like, no, you can't be taxed on unrealized gains because you hadn't received the income yet, and they're pointing toward the 16th Amendment, right? So we're now at the Supreme Court, and the Supreme Court has to make a decision. My reaction to that is the liberal side here is, I agree with Bill O'Reilly. That's really socialist. That's really communist type of ideology when it comes to this topic, because how can you tax someone on money on paper that have not received? Okay, so say for example, let's say you have a house, right? It increased in value, and let's say the equity increased up to $50,000. You have $50,000 of equity in that house right now. The government's saying we should tax that $50,000. Now watch this. Let's say that there's a downtick in the economy, and you lose the $50,000. The government is saying we should not have to pay that money back to you because of the fact that you lost that money. So the government wants all the upside, right, of taxes on the high times, right? Whenever values are high, taxes on unrealized gains, but they don't want to give you refunds if there's a down market. Trash, garbage. No, sir. On all levels. No, sir. So if the Supreme Court rules that against the 16th Amendment, against it, right? This is going to be a very hard time for a lot of middle class individuals. Notice I didn't say the wealthy. Look how they presented it on Vox. Tax on the rich. The rich ain't gonna pay none of that. We ain't gonna pay none of that at all, guys. Sorry. No, that's gonna really attack the middle class and the poor. Really, the middle class. The middle class are going to pay taxes on that, and they're going after everything. They're going after art, real estate, retirement accounts because it's linked to the stock market. All right. In cryptocurrency, anything that increases in value, guys, anything they're trying to tax the unrealized gains. So I believe that the Supreme Court is going to rule 63 against tax the unrealized gain because it blatantly goes against the 16th Amendment. But I wouldn't put it past them because you have some that kind of go back and forth when it comes to their views, right? But here's financial wisdom, guys. All right, here's a section that I put in for financial wisdom. All right, because a lot of individuals, when I put the reel out on Instagram and other platforms, some individuals got kind of scared, and rightfully so. Don't you worry, your partner got you. All right, we have a Countermove here. Here's my question to you. All right, when it comes to your approach on your investments and money and management, are you self-focused or generationally focused? I'm gonna let this sit there for a second. Are you self-focused or are you generationally focused? How you answer those questions is going to let me know how you're going to countermove this. Those that are self-focused typically run scared. Those that are generationally focused, this doesn't faze them at all. You'll know why in a second, okay? Now, the wealthy, we have a wealth strategy, not a retirement strategy, a wealth strategy. Why? Because we are focused generationally, not from a retirement standpoint. Does that make sense? The wealthy, we have a wealth strategy. Do you? If you don't have one, you're in some trouble. Potentially. You're in trouble. Because notice how they got this in here. Not through Congress, not through the legislature, right? Not through the executive branch at all. Actually through the executive branch, but through the legal system, through the courts. Someone taxed a citizen and they responded. And it went through the court system. It got to the Ninth Circuit. The Ninth Circuit ruled for the government, not the Moors, not the citizens. So now they're at the Supreme Court. So I got to ask you the question. Do you have a wealth strategy? Do you? If you don't you worry. I got you. All right, here we go. Now, let's keep it going, guys. Now, here is where this is the basics for people, okay? I always get asked, where can I start? Know how to use good debt. And I put hashtag leverage. Notice I said good debt. Notice I said the word debt. Debt cannot be taxed. Okay? The wealthy, we know how to leverage good debt. And that debt, we live off the debt. Let me give you an example, okay? I'm going to get out my little calculator for you, everybody, real fast so you can see what's going on. And again, I'm in real estate. So I'm going to use real estate, okay? Because people can actually easily understand that real easily, okay? Now watch this. Watch this. Now, all right, let me get rid of the caption here real fast so you can see this here. All right, here we go. All right, here we go. We got one of them said born against the equity. Not necessarily. Not necessarily, but you're tracking, okay? Here we go. Now, let's say for instance you bought a property for $20,000, right? 20,000. All right, here we go. $20,000. Boom. Here we go. Right? And let's say you put in $20,000, right? In improvements. So now you're all in 40,000. I'm using real simple things, okay? 40,000. The property right now is the after repair value of the ARV is 100,000, right? 100,000. So therefore 100,000 minus 40,000, right? I know you know what the answer is, but I'm walking through this. It's $60,000. The government says that they're proposing in front of the Supreme Court, we want to tax the $60,000. So how can you, as an investor, be able to thwart that? All right, don't you worry. Remember, the property is worth $100,000, right? 100,000. So 100,000, right? $100,000. What I typically do is I refinance this. I know I can go to the bank and get new debt. So 100,000 times 75%, right? I know I can get that. That's $75,000. The $75,000 pays off of new debt, pays off the 40,000. So now I have a $35,000 of profit, but it's not income. It's new debt. The government can't tax this new debt. But then you said, LaDale, what about, remember the property is worth $100,000, right? You now owe $75,000. Yes, I do. That's correct, right? So the government saying, but wait a minute, there's still $25,000 there that I can tax. Actually, theoretically you can when it comes to what you're trying to present in front of the Supreme Court. Don't you worry. This is why I said this here, guys. Let me go back to the caption real fast. A wealth strategy. Watch this, guys. All right. This is when I use another tool called life insurance, right? To be able to use that as an asset. I view life insurance as an asset, right? Not an expense. You're finna see why. Because really we have $25,000 that we got to eliminate, right? So now what happens is I have $35,000, right, of the delta between the $75,000 that I actually initially had and the $40,000 that I actually had that I paid off. That's $35,000, right? That's not taxed at all. That's good. But how do I take care of this $25,000? I'll take that $35,000, right? I put that $35,000, right, in a life insurance policy. Because that's another asset. Like real estate is an asset, so is life insurance. It's an asset for me, right? And I'm not eliminating any of my equity in the house. I am playing the paper game, right? So let's see. $35,000. I put that into life insurance. Now I know what your CPAs are going to say. Well, LaDale, you can't classify that as a write-off. I'm rocking with you. I know I can. No problem. I'm not betting on that at all. I'm betting on what I'm going to do with the asset, right? Because just like with a house, I can leverage a house to get out debt. I can do the same thing for life insurance, right? So I put that $35,000 into a life insurance policy, right? I know I can get 80 to 90%. I'm going to say 80%. I know I can get 80% of it out. So $35,000 after I put into life insurance times 80%. Boom. That's $28,000 of debt because I borrowed it from my life insurance policy. So let's go through the math, y'all. The government says, oh, wait a minute. Hold on, wait a minute. That's $25,000 still sitting there. I said, I see you, baby. I see that as well. But you know what, though? I put that $35,000 into my life insurance policy. I borrowed 80% of that out. Not a problem with it at all. Watch this, guys. I just eliminated that $25,000 bill. It is gone. My money is in a environment where it's building at a compound interest standpoint, 8 to 10%. I'm borrowing at a 4 to 5%, so I'm making a 3% delta there, guys. Right? I eliminated all of the $25,000. I still have access to my capital because in life insurance, I still got it there. It's still building up for me. I have not tapped into any of my equity in my house. Why? I still have $25,000 worth of equity there. You see what I'm talking about, guys? So when they say tax the witch, excuse me, that's a lie. That's a scam because we don't pay taxes because we have a wealth strategy. Do you? We know how to use good debt, leverage. That's it. That's just one strategy. When it comes to stock market, that's another strategy, guys. Okay, I'm giving y'all some game today. Did you guys know? Excuse me, guys. Did you guys know that I believe Apple has about $3+ trillion or more in the bank, chilling, right? 3+2, baby. I know it's good, baby, but this one's gonna be even better for those that actually have retirement accounts. Yep, gotcha. Pick the good stuff. Now watch this, guys. These are for the stock market guys. Do you understand that Apple actually has a ton of money in the bank, right? Ton of money in the bank. And let's say, for instance, the Apple stock goes up, and let's say it goes up, and Apple makes additional $1 trillion. $1 trillion. The government says, "Hey, Apple, we want to tax that money." Apple says, "No." What does Apple do? Apple just takes a loan against their stock. Debt. They probably get around like 80%. But the government says, "Hey, I want at least 20% of that." All they do, because they have debt now, all they do is they put that money into another asset and leverage that asset. They've now eliminated their debt. The same thing that I just did for real estate. Same thing. The wealthy will not pay taxes on this at all. It is a lie. It's a scam. Because why? We have a wealth strategy. Do you? We do not live or plan for retirement. We plan with a wealth strategy. Wealth strategy. That's our plan. We don't have retirement plans. They didn't exist at all. Does not. So, am I concerned about the more versus the United States? For me, no. For you, I don't know. Maybe. But I guarantee you, all the Fortune 1000, CEOs, C-suite people, all the Fortune 500, C-level, C-suite people, all of the wealthy entrepreneurs in real estate, stock market trading, private equity, all of that stuff there, guys, we know how to leverage our shares, which is an asset, our life insurance, which is an asset, and our real estate, which is an asset, to eliminate all those taxes, all of them, every one. Warren Buffett, guys, retirement plans, yes, they do. Retirement plans fluctuate too much. We've seen that, and they're coming after that delta. They're coming after the arbitrage. Because why? That's an asset for the middle class, not for the wealthy. Not at all. If the wealthy dibble dabbles in IRAs and Roth IRAs, I guarantee you it's attached to some type of annuity or life insurance product. Now, some folks may say, "Well, LaDale, they're going to try to also tax the life insurance." No, sir. Why? Because the wealthy use life insurance. Why would they wound themselves? Why would the wealthy wound themselves? Doesn't make any sense. When the majority of the money, we're talking about $10+ trillion, is in the stock market. BlackRock, Vanguard, State Street, they manage it. 10 plus trillion. Come on, guys. It's chess, not checkers. So, guys, what's the counter move? I always say, guys, peep it, sweep it, and then keep that thing. Here we go, guys. I always begin here. Examine your current situation. That's the peep it side. Look at what you're doing now. Is it working? Is your capital protected from stupid decisions made by individuals that they actually have some authority, a little bit of authority over how the market works? Are you sheltered from any of that? Right? Are you? Are you? Right? So, and Rep, you're correct. If the market is high, my home can be worth hundreds of $1,000s more. Exactly. And they want to come after that equity. You're spot on. You're correct. Right? Now, have you made the necessary actions to protect your capital? If the answer is no, you got to do, guess work you got to do. Yeah. Got work you got to do. Yes, sir. Yes, you do. Here we go. Sweep it. What has your current money management approach yielded you? Are you making a good rate of return on your money? Is it protected from any downturns in the market? If the answer is no, you got a problem. What about taxes? Okay, what about taxes? With a good plan, you can effectively eliminate taxes. You know who's really good at this? Donald Trump is very good at decreasing his tax liability. He's excellent at it. One of the best I've ever seen. Ever seen. Now, don't you worry, your partner got you. All right, now, let's keep it going. Okay, again, I asked the question. Is your money management approach working? You got to be honest now. You got to be honest. Lying will not help you out at all. Right? Now, keep it. Here is the secret to solving this problem. Start thinking generationally, not for Saturday night. Start thinking generationally, not for retirement. Plan for 3 generations. Study families like the Rockefeller family, the Rothschild family, even the Vanderbilt family who lost their wealth, who lost it because of bad decisions 2 or 3 generations after the mother and father passed away. Study that. Read books. Your Next 5 Moves by Patrick Bet-David. Rich Dad Poor Dad by Robert Kiyosaki. Transform your mind by what you put in your mind, by what you listen to. Put down the Instagram and read a damn book. Ain't talking about a book a day. Read 10 minutes a day. Transform your mentality. Because right now, what's going on right now? These socialists that are actually in front of the Supreme Court are arguing this more versus the U.S. government. They're coming after the unrealized gains. You are one decision away from losing everything because of someone else's decision in front of the Supreme Court. Right now, they're arguing over the word income. Right? 9 justices, 9 right now are listening to arguments over the word income. If I believe it'll be 63 and they'll knock this down, but guys, there's a possibility that they'll say, we agree with the government. And then you were really in some trouble now. Because then you're exposed. You are exposed. They're coming. They are coming, guys. They are coming. That's right. Read a damn book. Read a damn book. Come on, guys. You are one decision away from changing your entire perspective. It's time to turn your side hustle into an enterprise. The only way that actually happens is if you begin to think generationally. Begin thinking like the Rothschilds, like the Rockefellers. Begin thinking like the Jordan, Michael Jordan. Thinking like the Oprah Winfrey's when it comes to business. John Hope Bryant, myself, Brian Adamson. There's a lot of guys that I can talk about. Vusi out of Africa. Patrick McDavid, Matt Sapala, Deontay Blade Ford, Brandon Anthony Clark. There's so much content out there, guys, giving you different strategies on what you can do. But you're going to have to pay for the wisdom. Stop being cheap when it comes to transforming your mind. You ain't cheap when it comes to you drinking, going out and partying, are you? You're not. It's time to get real. If not, I'll see you at the auction. You're correct. They literally are changing the definition of income. Yes, they are. And again, guys, to kind of end it here, guys, is all of this, guys, it's over the word. It's for them to tax you on unrealized gains. No matter the asset. No matter if it's digital or tangible. So, guys, man, if you could, guys, give me your thoughts. I hope this was beneficial. Hope this helped you guys out, guys, man. Comment below, guys. Also, if you need some help, right? And getting the wealth strategy started, guys, scan on the QR code, guys. Someone from my staff on my team will assist you out. I don't know what you need. I don't know what you've been wired for, but we can assist you in pointing you in the right direction, right? Or you can actually scroll down in the comment section. Also, no matter if you're on Rumble or YouTube, whatever it may be, our link is below if you can't scan this at all. But guys, this is we're here to help you guys out. Scan on the code, schedule a call with us, and we'll walk you through. We'll listen to what you need, right, and point you in the right direction. But again, guys, it is time for you to turn your side hustle into an enterprise. It's time. It is time, guys. But guys, I hope this was beneficial, guys. God bless you. Thank you so much for blessing me with your time, guys. Let's see here. Oh, Red Pill, thank you so much. She said this was fire. She said this was fire. She said income definition. It says the amount of money or its equivalent received during a period of time in exchange for labor or services for the sale of goods or property or as profit from financial investments. Notice that is all when you receive the cash, not as a asset increases in value. Notice that definition. They're arguing over this definition. And you're one decision away from them saying we want to change it or we're going to abide by this definition. Don't leave that decision based on what someone else tells you. It's time for you to get your wealth management strategy. Right, guys? Man, yes, they are removing the sale of game. Exactly. Yes, they are. Yes. And you know, let's go Cowboys. You see that thing, y'all? It's all good, y'all. But y'all, give me your thoughts, guys, about what it is. Comment below, guys. Give me your thoughts, man. God bless you. Also, guys, before I get off real quickly here, every Friday, Cliff and I actually do a real estate live training, guys, every single Friday. This is what we do. Guys, you're welcome to come in and look at it every Friday at 5 p.m. on all platforms, guys. Here you go, guys. Here we go. What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
All right, guys, every single Friday at 5 p.m. CST, Cliff and I do a free real estate training on all platforms. We take a topic in real estate. We talk about the current market analysis. and then we give you a strategy that you can implement for free every Friday at 5 p.m. Central Standard Time, guys. But guys, again, give me your thoughts, guys. Thank you so much for your time. God bless you guys. Again, share. Guys, share this with anybody that you may know. It's something that people need to know. Okay? Put down your political flags and let's begin leaning and reasoning together and walk in wisdom, guys. But guys, thank you so much for your time. God bless you. But you know how I end it every single time. Before you leave, and while you can, you see that thing, guys. Take that damn picture and give it to your mom and them. Now say it with your chest and holler at your partner. See you guys next week. God bless you. Peace.